Middle East tensions in focus this morning. The Crown Prince of Saudi Arabia, Mohammed bin Salman, telling 60 Minutes last night that tensions with Iran could lead to massive instability for global oil markets following the attacks on Saudi oil facilities. Watch.
If the world does not take a strong and firm action to deter Iran, we will see further escalations that will threaten world interests. Oil supplies will be disrupted, and oil prices will jump to unimaginably high numbers that we haven't seen in our lifetimes.
Joining us right now is IHS Markit Vice Chairman Daniel Yergin. And Dan, great to see you. Thanks so much for joining us. You've been a student of the oil and this business for a long time, and you've studied it so much. Do you agree with that?
Well, I think the risks are certainly there. I mean, the attack that occurred recently in Saudi Arabia was unprecedented on a scale that had never been seen before. It was like a scenario had become reality. But what's so striking is the calm in the market. But, you know, the Iranians did this. They denied it, but they did it. But what's to prevent something like this from happening again? Yeah, but
Dagan has mentioned a number of times that the U.S. is in such a stronger position today in terms of its oil and production on the global stage. Right, Dagan?
I talked about it before we even got to this point, that our national security is in our energy sector, and it gives us the ability to fight back against nations that hate us, that are oil producers.
Well, indeed, and you wouldn't even be able to do these sanctions on Iran that we have on their oil were it not for the growth. I mean, it is no question that the shale development has changed the strategic position of the United States. It's reconfigured the oil market, and it's reconfigured the psychology of the oil market, which is why we've seen this relaxed reaction. If this had happened 5 years ago, we would have been in panic territory.
But what about the top story in the Journal this morning? One of the top stories, U.S. shale boom slows down amid worries over the oil supply. You were referring to that earlier.
Well, I think it got stymied at the beginning of the year because there was not enough pipeline capacity to move oil out of the Permian. That pipeline's being fixed. By the end of this year, beginning of next year, the U.S. will be at 13 million barrels a day. I think we're not going to see the incredible growth that we've had, unprecedented growth over the last several years. It will be a slower growth, but the U.S. is going to continue to grow, and the rest of the world knows that.
Do you worry about a change politically if you have somebody else in the White House, that they change the position on oil, on natural gas, on the ability in these shale formations to extract oil?
It's a really important question because the Journal this morning in that article writes U.S. oil production increased by less than 1% in the first half of 2019 after nearly 7% growth over the same period last year, according to the Energy Department. So it's clearly slowing.
Right.
What happens if leadership changes?
But the Energy Department does have it at 13 million barrels a day by the end of the year. But I think you've asked a very good question, and all you have to do is look at the words. They say, you know, leading candidates said they would stop fracking. Well, they may not have the power to stop fracking, but they can sure do a lot of things like regulation and make it much more difficult. They've been quite hostile, and I think have failed to appreciate the strategic value the United States has gotten out of this. 2/3 of U.S. business investment since 2008 has been associated with this shale boom.
And it impacts markets, we know that.
Yeah, absolutely. Dan, how do you feel about where the E&P companies are in the United States right now versus where they were in the last cycle? Is there the right amount of leverage? Is there the right amount of debt? In the 2015 timeframe, a lot of people lost a lot of money in the energy complex. Where do they stand now?
Well, I think we've seen to some degree a divorce between investors and the shale companies. It used to be growth at any cost. Now it's growth at what cost? And the shale producers have to prove to investors that they can return money, not just increase production. And that, I think, is reflected in how the market's reacting to them. So there's not the kind of enthusiasm that was there a couple of years ago.
Is the slowdown in the production rates just a factor of the lower price per barrel of oil not having as much capex going out there? Do you, at $40 to $50, do you put out less money in new exploration?
Well, I think they've all taken this pledge, or most of them have taken the pledge, we're going to return money to shareholders, and that means that the investment levels are going to stay within their budget rather than jumping up when the price goes up. So that also means activity is at a somewhat lower level than it would have been in this environment a couple of years ago.
And what's the timing on getting the takeaway logistics fixed?
By the end of this year, we have these 3 pipelines are all in operation, and that's why we're going to see a jump in U.S. production.
So That takes us from 12 to 13
Yeah,
a day.
13.
And then where do you think we can peak in the next couple of years?
Well, of course, that's subject to great debate, but I think our view is that probably the U.S., we can assume around 16, 17 million barrels a day, which is incredible when you think in 2008 the U.S. was at 5 million barrels a day.
Wow, 2008.
Yeah.
Would that change if there's a change in leadership, if we end up with a Democrat in the White House?
Well, that goes back to Dagan's question, and I think it would. There would be, because there would be a wave of regulatory interventions, and you know, you just have to listen to their language.
They're promising to get rid of the use of fossil fuels in this country in a matter of a decade or a little bit more than that. But just think about that. Again,
can I answer in one word?
Yeah.
Unrealistic.
Yeah, thank you. But do you think about that? If you're promising to go to cars that use renewable energy, that don't use that are, say, electric rather than gasoline-powered internal combustion engines, you're going to get rid of fracking. So you're going to get rid of basically natural gas exploration. So how are you going to produce the electricity that then powers our automobiles? That's what I can't.
And there's a complete need for balance in what we need, and then the need for people to fight climate change.
But,
Right?
but these plans don't make any sense.
I don't think
I mean,
that
you need
makes sense.
I mean, we need a mix. I mean, natural gas is a really important role. It's overtaken coal in our electric generation. Renewables will be part of the mix. So I think what we're really doing is moving down the road to a more mixed system. But, you know, EVs, the automakers, there's a lot of action about them. But, you know, the sales are less than 2%. And we did a zip code study and found that 25% of the EVs in the United States are in just 3 zip codes.
And
Wow.
are they all in California?
You know where they all are.
Yeah, they're all in California.
Yes, exactly.
Do I hear you saying that oil prices will stay elevated? What does this all mean for the price of oil this year and going into next year?
I think we've seen what happened. You had this disruption, the most important piece of hardware in the entire world oil industry disrupted. Production's coming back in Saudi Arabia now. The equipment still needs to repairs finished, and the price is back to where it was. So I think that what's weighing on the oil price is international trade wars, weakening economies. I think those are the dominant
And does
factors.
it keep weighing on it is my question. Do you think oil goes up or down is really what I want to get your take on.
I think in this environment, well, if something else happens in the Persian Gulf, and remember, Iran is boxed in right now.
Yes.
And they're exporting almost no oil, and this has been a very low-cost thing for them to do. So if something else happens, then would see prices, you know, we could see prices again being elevated. But right now, I think there's kind of confidence in supply. I think the shale psychology is very important in the oil market.
Okay.
So it's really what's happening in the global economy.
We'll leave it there. Great to see you. Thank you so much, Dan.